You've probably noticed something kind of weird happening in the markets lately, right? I mean, on one hand, you've got stocks, and they seem to be finding their feet again, slowly crawling their way back. But then you look over at the crypto world, and it just feels, well, stuck. So let's dive into this and really unpack the story behind this huge divergence.
All right, first things first, we've got to see just how different the mood is in these two camps. We're going to look at the performance, and we're going to look at the general feeling, the sentiment. And believe me, the contrast is pretty shocking.
And this really brings us to the big question of this whole explainer. What on earth is going on here? Why is one major asset class showing all these signs of life while the other one, the one famous for its crazy volatility and massive runs, is just lagging so far behind?
Wow, this slide just captures that mood difference perfectly. If you look at the stock market's fear and greed index, yeah, it's still in extreme fear, but it's showing signs of life. It's climbed from a low of 7 all the way up to 24. Now contrast that with crypto, which is just stuck at the bottom. No signs of a similar recovery at all. And here is the real-world result of that feeling. The S&P 500 is literally knocking on the door of a full recovery. It's less than 1% away from its all-time high. But Bitcoin, it's a staggering 39% away. I mean, that's not just a gap, that is a chasm.
So what's really going on under the hood here? Let's dig into the data a little bit and see what's causing this internal struggle for crypto.
For Bitcoin, the story is pretty much written in its price chart. It's not just drifting around randomly. It's actively in a battle with a key historical price level. It absolutely has to break through these old lines of resistance to signal to the entire market that, hey, the bottom is in and a real reversal has actually started.
So the bottom line is, this isn't just about feelings or market sentiment. It's about breaking through very specific price ceilings. For Bitcoin and for other major altcoins like XRP to signal a real comeback, they have to push past these huge resistance levels. And right now, it feels like they're just hitting a brick wall.
And that wall, well, it leads us right to the main suspect behind this whole situation. The reason for that wall is a massive shortage of cash in the system. Let's talk about liquidity.
Okay, so what even is liquidity? The absolute simplest way to think about it is like blood in the financial system. When there's plenty of it, money flows easily, assets get bought up, and prices, they go up. But when it gets drained, the whole system just slows down and gets really, really sluggish.
And what's been draining all that blood from the system? It's a policy called Quantitative Tightening, or QT for short. This is literally the Federal Reserve actively pulling money out of the economy. It's the financial equivalent of turning on a giant vacuum cleaner and just sucking all the cash out of the room.
And this quote from Deason on X, man, it just nails it. It connects the dots perfectly. The reason risk assets like XRP aren't moving isn't because something is fundamentally broken with them. No, it's because they are caught in this macro liquidity trap that the Fed created with its policy. The engine simply has no fuel.
But what if that's all about change? Well, prominent investor Cathie Wood thinks it is, and she's actually pinpointed a specific time when the Fed might just flip that switch back on. So according to Cathie Wood's forecast, December is the month we all need to be watching. She's predicting two massive events. First, the end of that liquidity-draining quantitative tightening on December 1st. And then second, a potential interest rate cut from the Fed just 9 days later on December 10th.
Now this is a really key concept. Just stopping the drain, just ending QT is what's known as de facto easing. Think about it like this. Even if you're not adding more water to a bucket, just plugging the leak is a huge improvement, right? Turning off that financial vacuum cleaner sends a powerful signal to the markets that things are about to get a whole lot better.
So, let's say she's right. What happens next? What does the world even look like when all that liquidity starts flowing back into the system's veins?
Well, the theory lays out a pretty clear and powerful chain reaction. First, the Fed stops QT. Then, that vital liquidity starts flowing back into the markets. Next, the big players, the market makers. They jump back into the game. And the grand finale? High-risk, high-reward assets like crypto, which have been absolutely starved for cash, finally break out and go on a rally. And to really understand the sheer scale of what we're talking about, get this. The Fed's reserves dropped by $2.4 trillion. That is a massive amount of money that's been sucked out of the system. Just imagine the impact when even a fraction of that starts to flow back in. So the crucial point of this whole analysis is that liquidity has been the hidden variable, the master switch controlling the fate of these riskier assets. The argument is that the fundamentals of crypto haven't really changed, but the environment around them has. And if Cathie Wood is right about December,
The big question we're all left with is the market truly ready for that switch to be flipped?